Everybody, we're finally kicked off. We're a couple of minutes late today. Just waiting for some guests to arrive, but we're here now and we are core today. First of all, we'll deal with item 1 on the agenda, which is apologies. Joe, and I think we have some apologies.
Yes. Well, first of all, can I welcome Councillor Stewart and Councillor Fuller to their first meeting of the Pension Fund Committee. They are replacing Councillors Garrett and Critchison, respectively. Apologies, we have Councillor Legioni, Councillor Churchman, Steve Milford, the Employee Rep Committee. We've also got apologies from Martin Doyle as Chair of the Local Pension Board. Barbara Milton is attending online to present the board update. We've got Chris King here from Hyman's to cover the investment reports that are on the agenda, and later on in the meeting by Andrew McBurns and Enzi from virtually to discuss the governance update.
Welcome online, Barbara. And I think Nick we've had before, but for Paul, welcome back to the Pension Committee. And Paul was very eagerly noting his desire to crack on with the pension training, which I said you'd be sending the links through, Joe. Right, item 2 is the minutes. So you've all received a copy of the minutes of the last meeting. Those were here anyway. Were there any comments on those? All right, proposed by Councillor Brading, seconded by Councillor Ward. So if you were here on that occasion and deemed them to be a true and accurate record of what occurred, please raise your hand. Any to the contrary? No, so we've got 3. I think that's enough, isn't it? Right, so I'll sign the minutes off. Good, thank you. Right, item 3 on the agenda then is to receive any declarations of interest. Councillor Stewart first.
I have a family investment portfolio in the stock market, which includes various individual stock picks.
I don't think that's a registerable interest because our investments are separate to yours. As long as you are appreciating that whatever information you receive as your as part of your membership of the Pension Fund Committee does not constitute investment advice for personal investors, then that should be acceptable, but we'll note that. Thank you very much.
I suspect if that was a declarable element, many of us would have to so declare, myself included. So I think it is separable and not declarable here. Councillor Fuller.
Thank you. I'm referring to the contributors paper on page 47. I'm a member of Northwood Parish Council, Cowstown Council, and I'm chairman of Gurnard Parish Council, all who has members of staff that contributes to the pension fund.
Thank you, Councillor Fuller. That I don't, again, that will be noted, but the only issue will be if there are any issues with those employers which we have to raise. I know in previous committees we did have the chair of Ryde Town Council as one of our committee members, whose we did have some issues with their contribution, which was a level of personal embarrassment rather than a declarable interest. But we will expect perfect contributions and perfect behaviour from your parish councils. Thank you.
Thank you. I didn't think it was really declarable. However, I think it's probably best to say that just to make sure that. And also, I wanted to prove that I'd read through the agenda very thoroughly. So
Looks like you're well on the way to a gold star today, Councillor Fuller.
It's his first meeting. We'll allow him that.
So no difficult questions coming your way today then. Right, item 4 on the agenda is public questions. Do we have any public questions today? No? Good. Number 5 then is to receive a report from the local pension board.
Barbara.
Are you able to go to video so we can see you, Barbara?
Um, I could, but I'm actually in London, babysitting for my granddaughter, so I'm feeding her rusks to keep her quiet at the moment. So
Okay,
is it okay to stay camera off?
yeah, of course, go ahead.
Okay, okay. The pension board minutes, item 4, we so noted the ongoing saga of the annual reports, and we know that the fund manager is doing everything she can to, you know, progress it, but it's really out of her her control. I did read that I think things are starting to move, and there's about a third of the councils have now had their accounts audited. But we accept that it's an external pressure on the audit resource. The board did ask for a breakdown of the recharges on the accounts. We still haven't received them yet. We're just concerned that these payments are ongoing year after year, even though there have been some changes. Some of the IT is now outsourced, but we are still receiving the same charges from the managing authority. There's a few areas which have been challenged, and I think some of the officers have challenged too. But what we're concerned about the lack of transparency over the charges, and we'd like to see a breakdown of them. And we're still awaiting for that breakdown. So, I mean, perhaps the committee might like to seek their own assurances on this, but we will continue to press for a breakdown and then scrutinize the charges on behalf of the fund.
Sorry, just to pause you a moment there, Barbara, I think Joe wanted to intercede.
Yeah, thanks, Barbara. Sorry for not having sent them through. We are working on that, and it will be presented at the board meeting on the 13th of December.
Okay, great. We'll scrutinize it for the board and report back the next meeting on that then. Looking at the work plan is still ongoing. I mean, this the issue on this is the risk to the fund, the resource risk and the key person risk. We have a work plan, but a lot of it can't be progressed because of the lack of resource. It's I mean, this situation has been ongoing for quite some time. There is a report which the managing authority commissioned I think they received it in February from Bartlett Waddington about the strategic governance of the fund, the way forward. And we've, as a board, we've been pressing to have information on that. And we feel that a decision is long overdue on that report. I mean, it's not a lot I can say about. I mean, as a personal pension board member, I'm questioning whether the managing authority is in breach for the inaction on the decision making. I know that things are being done. I mean, we're trying to put a resource officer in. There are things being done, but they seem to be sticky plasters on the major strategic problem. And it needs to be dealt with. A decision needs to be made as to the way forward for the fund. And we've either got to look to outsource, or we've got to look to bolster our resources so that we can manage it as it should be managed. I know a lot of other funds, particularly smaller ones up and down the country, have the same issues, but that doesn't negate our responsibility to do something about it and to put the resource in to fully equip the fund manager with, the resources that she needs to, to progress various things. I mean, the board, one thing I've noted on our minutes is that we haven't got an update on the risk register. Now, we've been tasked by the committee to monitor the risk register. So I think that that's something that we should be including on our minutes to you each time. I mean, the serious risks which we discussed at the meeting is cybersecurity, the ESG strategy, the resource issue, and the key person plan. And all of these hinge on the strategic decision as to which way the fund is going to go. And that is something that the board and particularly I personally feel that it should be progressed as a matter of urgency. A lot of things the fund is stagnant on. We noted the administration report, and it was discussed in detail, and the pension admin team continues to operate in a very high level, quality level. We're very happy with the running of the fund. It's just the resource to progress the strategic elements, which the fund should be addressing. I mean, a lot of what we discussed is just around this, and we feel that there is a bit of, there's quite a lot of stagnation in the strategic decision making. I know the ESG strategy is lacking, and I have had the comment that you do discuss ESG with fund managers, but discussing ESG with fund managers is not a strategy, is not a written policy. Our policy, our policy and the strategy is two very short paragraphs. We are putting the fund. I mean, the fund is very well funded now, and you can look at that. It's being run very well, but you have to look to the future. I'm looking at 20 years, 30 years time, unless we sort out our ESG policy and understand how to invest in future. The investment field is changing so rapidly that we could lose out in future. I mean, I'm sure my pension is secure, but I'm looking at the 18-year-old starting now and what the pension fund is going to be like in 40, 50 years time. And this is something that, we have to look long term to see, to make sure we have the policies in place now to move with what's happening, because it is a very fast changing field. So that sort of sums up the board's discussions last time.
Thank
Do
you,
you have any-
Barbara. A very comprehensive reply, and we appreciate your strategic view on things. Joe, is there anything you wanted to comment back on?
Yeah, thanks, Barbara. That was very very comprehensive. I can provide a few updates on things, but some where I'm just having to say, I'm going to have to say we'll put that on hold for a second. In terms of the risk register specifically, linking into the capacity and resourcing availability, the risk register hasn't been looked at for too long, but we have been dealing with a number of other crises in the fund. But the Pension Fund Committee, in one of the reports, in Appendix Report 11, the governance update has got an update on the red risks that we were looking at previously. I am working with Hymans Robertson governance support people to go through the risk register in detail, and the intention is to present a full risk register to the pension board on the 13th of December. In terms of, can I just give a quick update on administration staffing? Barbara mentioned the admin report that we mention every month, every week, every meeting at the pension board. Whilst we are maintaining high levels of data quality, the pensions admin team have lost 6 out of 8 staff in the last 12 months. And we've recruited 3 new trainees to replace 3 of the experienced pension officers, and we've got an additional support assistant. But unfortunately, the staff that were responsible for training the trainees have also left the authority now as well. the internal work that's going on, there's an administration team redesign being led by Sharon Betts, Director of Resources, and Claire Massiter, Strategic Manager for the Business Centre, which we're looking at introducing some additional sort of career grade posts to support progression from the lowest level of the team up to the manager, and support career progression and retention of staff. But in the short-term solution, we've signed a administration support contract with Hymans, which was signed on the 15th of November, which gives us 50 hours of a senior administration officer and 40 hours of a technical administration support from Hymans each month for the next 3 months as a minimum, with options to extend. But the extension will depend on the redesign of the service and the ability to recruit the staff to those new posts. I know that the chairman of the pension board, Martin Doyle, had sent invitations out or requests out to have a meeting with the director of finance and the chair of the committee. I believe there is a meeting between the director of finance and the chair of the board, but I'm not sure whether that has happened, when it is happening, or what the outcome of that report will be. In terms of the Barnett-Waddingham report that Barbara mentioned, Chris Ward, as Director of Finance, is aware of that report and has an action from that to do some background investigation before the report is presented to the board and the committee. Again, I know that that is on Chris's agenda, but I don't know how far up that agenda it is and what the progress has been, but I am keeping on that at the moment.
I think the budget issues are taking a great deal of time at the moment.
Yep, noted. We are in the process of looking at our investment strategy statement, which will cover our ESG-RI policy. I commissioned that work from Hymans yesterday, and the intention is that that comes to the committee in February. Whether, based on the discussions we're having around ESG and RI, whether that is then formally adopted in February or taken back for further review, we'll need to look at that, but the intention originally was that it would be presented to the February Pension Fund Committee. That's all I've got on the feedback. Can I just raise one issue that I have in terms of membership of the pension board? Board membership is currently set at 6 members, which is equally split between staff, scheme member representation and employer representatives as per the requirements of the Public Services Pensions Act 2013. Currently, we have 3 employee reps successfully in place, and as of the 7th of November, we have 2 employer reps, one from the external employers, which is from Wootton Parish Council, and 1 staff employer representative nominated by the corporate management team, which is Tonya Jaston, who is the creditor and reconciliation team's manager. The final member employer rep of the pension board, as stated in the constitution and the terms of reference, is an elected member of the Isle of Wight Council to represent the Isle of Wight Council as employer. This has been presented to the last 3 full council meetings in July, September and November, and appointment has not been made. I've emailed the Director of Finance, the Monitoring Officer and the Chairman of the Pension Board and Pension Committee to seek their support in promoting that or seeking alternative arrangements through amendment to the Constitution if necessary. And I'm also seeking advice from Hymans Robertson as our governance consultants on what I do next in that board. As of today, I've had no responses from the internal email that I sent round, and I am aware that Hymans are looking at options for us as to what we can possibly do next. And I'm hoping that we can have an update before the board meeting on the 13th of December, although the earliest it can go to full council again is now January.
Thank you, Jo. Did you want to mention the advert?
I can do, yes, sorry. In terms of the resources, thank you very much, Chris. We have had approval from the Director of Finance to recruit again, or try to recruit again, to the Governance Support Officer post, and the advert went live yesterday. It's in Isle of Wight jobs. It's going to be on local government jobs. It will be on Facebook and LinkedIn. It's also on Pensions Age, which is a national publication relevant to all aspects of pensions, and it's been circulated through the LGA to their mailing list. The advert went live on the 21st of November. Closing date is the 18th of December. We're hoping for applications, and we've scheduled interviews for the week commencing the 8th of January.
I think Barbara has a comment, wanted to come back, got a hand raised. Barbara.
Yes, I'd like to reinforce Joe's comments on the appointment of elected member. If full council is having difficulty, I know pension board member isn't particularly exciting role, but if the full council is having issues, I would support a change to the constitution. That wouldn't negate a full member being appointed to the board, but it would alleviate the pressure of trying to get someone to take up the role.
Thank you, Barbara. I think we can all try and speak to our respective colleagues who are not involved directly with us here and see if we can find somewhere from any of the others. There are, after all, 39 councillors. We should be able to find one of them who's desperately keen to join that forum. Councillor Fuller.
You've actually just answered the question that I raised. I didn't think that members of our committee can go onto the local board, and I just wanted to clarify whether that was the case, because I think what you find is those members that are interested in pensions are already members of this board. I think in the past, Councillor Barry used to go along to the pensions meeting, but in a sort of like he didn't know. I was just wondering whether you could attend just to show that there was a presence, but not have any voting rights or anything like that. But that would break your impartiality, obviously.
The pension board is effectively is the equivalent to the corporate scrutiny to an extent in terms of the pension fund. So it doesn't necessarily need to be an interest in pensions, because it's really looking at the governance and administration side. So it could be somebody that's got an interest in governance or an interest in audit or process or procedures. In response to Councillor Jarman's comments around seeking members seeking their interest from their colleagues, that would be gratefully appreciated. But I would say that I did send an email round to all political group leaders, and I do believe that the monitoring officer and the manager of democratic services have also sent all elected member briefings around, suggesting that membership is appointed. I do appreciate it that it is not the most exciting, they're not the sexiest role in the council, but it is a vitally important role, and it is a statutory duty of the council to appoint somebody to that board.
And I do attend quite a few of the pension board meetings, so whenever I can, I go. Councillor Brading.
Thank you, Chairman. I thought the report was quite negative, actually. I think the pension board report this one was quite negative rather than positive, which was disappointing. Regarding membership of the board, I would be against changing the constitution, because I think a member should be on that board. I've been a councillor now for 7 years. Councillor Barry was always an active member of the pension board. Councillor Lilly took it on and then dropped it like a stone, which is unfortunate. I think that shouldn't have happened without a replacement being put in place. We as a group have discussed it at every meeting we've had. Councillor Churchman is desperate to join the pension board, but we keep telling her she can't be on both. And if she would leave a vacancy in the board, and the committee, and I've told her the committee is more important that she stays on that rather than joins the board. But I do like the comment about you don't have to be interested in pensions, more the governance. I think with our next meeting, we'll go back on that subject again. Say, look, this isn't about a pension board, it's about a governance board. I think if we explain it in that manner to our members, we might get more of an interest, as it's saying it as a governance role rather than a pension role. And that's what we'll do on our next meeting. So Councillor Churchman wants to be on both. To Councillor Fuller's point, you can't. So we'll have another go emphasising a governance role rather than a pensions role.
Thank you. All right, anything else on that point? No? Right, moving on then to agenda item 6, which is the policy on academy funding.
Thank you. I don't really have a lot to add to the paper as presented, but just to make a couple of points of clarification. This is a formalisation of the existing processes that we have that we operate within the pension fund. The need for a separate policy arose from the review of the funding strategy statement after the triennial evaluation in March 2022. Where we streamlined the funding strategy statement, but supplemented it with additional policies to make each of those more easily accessible to users. The purpose of the policy is to set out, provide clarification for employers and the fund on what will happen when an academy is created, when an academy if an academy merges with a multi-academy trust, or closes or outsources any of its contractual arrangements. Key points to note, section 4 of the policy deals with the consolidation of multi-academy trusts. Many of the national multi-academy trusts will have academies in different areas of the country, and at the moment the regulations require that the academy is a member of the local government pension scheme fund in the area which the school is located. Slight changes to regulations have now allowed, with the discretion of the Secretary of State, that a national multi-academy trust can seek to consolidate all of its schools into one single LGPS fund. The policy statement that says that the Isle of Wight Pension Fund will not accept transferring academies as a result of multi-academy trust consolidation is that we don't want to be the host LGPS fund for multiple funds. Multiple academies. We will support consolidation should any of our MATs decide that they want to go out of the Isle of Wight fund, but we won't want to accept them in additional employers because we haven't got the resource and capacity to deal with that number of additional employers. That's recommendation 2.2, and I hope that you'll agree with that as a statement of principle. And then lastly, the outsourcing of contracts, which is section 5.6 of the policy. This is new regulations from governments which deal with the requirements for the outsourcing of contracts. But this is what we have already done. We've already been doing that since the inception of our academies and their outsourcing. So the statement in there is seeking to just note that it is a formalisation of the fund's current practices, but we need to agree that as a statement of principle. The consultation approach and outcomes. So we discussed this with the pension board. We sent it to all of our existing academies and those schools that we were aware of that are looking to convert to academies. And the outcome of the consultation questions and responses is set out in the policy. I'm happy to take any questions on the policy or the covering paper, but I would, subject to those questions, move the recommendations at paragraph 2.
So, I'll start off with just one question I had on this is, given the recommendation on transferring academies coming into a local fund, do we have the ability to say no to them? I understand the issue of capacity, but do we have a statutory ability to refuse it?
I believe when it's not a done deal, when the multi-academy trust is seeking to consolidate, it will approach all of the funds in which it is a member and seek their approval or declining to being the recipient or the transferee. I don't believe, well, from a local perspective, practically, we do not have any multi-academy trusts that are based on the island as such. So the chances are, if our multi-academy trusts were likely to consolidate, they would be consolidating to a mainland fund. But we do have the option to decline if we are required. It's not a done deal at any point.
Thank you. Any other questions?
Sorry, just to clarify, my understanding was Ormiston which is Cowes, is a multi-academy trust.
Ormiston, that's Cowes Ormiston Academy, is a multi-academy trust, as is the Diocese of Chichester Academy Trust, which is St Blasius and St Francis. Lanes End will be joining that trust in February. There will also be the Hampshire, Isle of Wight, Southampton and Portsmouth Academy Trust, which the Island Education Federation's schools, Medina College, Carisbrooke College and the Sixth Form will be joining in February. Those are multi-academy trusts, but they are based in a mainland head office effectively. So we do have multi-academy trust academies, but we don't have a multi-academy trust per se based on the island.
Sorry, thanks for that clarification.
So I'll, Councillor Brading. Right. Good. So Joe had moved it. We'll take that as a second. All those in favour? So carried. Thank you, Joe. Right, item 7, draft annual report and accounts. Yes.
Hello, change of Joe.
No,
Change
Joe
of Joe this time.
Joe is the other Joe.
Yeah.
Shouldn't call you the other Joe. It doesn't sound right, does it?
All right, I'm used to it. I'm used to it. First thing I want to do is I want to apologise for the 60 pages on the appendix. However, if I'd sent the full report through, it'd have been over 260. So I think 60 is quite a good deal. We are obliged to publish an annual report each year under LGPS regs, and we have a deadline of the 1st of December to actually get the publication done by. The audit of the 22-23 pension fund financial statements has literally just begun. I'm up to my eyeballs in audit requests, and that of the council hasn't even started. And the only other place that the pension fund accounts are published are within the council's audited statements. So we can't do ours independently of the councils at the moment. What we're looking to do is we're looking to publish a draft annual report in which the unaudited financial statements are included, so we can actually adhere to the deadline 1st December. What we have done with the paper is, as we have done in previous years, we've literally only included in the appendix the items that have not previously been sent through to the committee. So it makes life a little less painful for you. Really, that's about all I wanted to say about the paper, because I'm sure you've read it all with avid interest. And I would just look into ask that you take the recommendations in paragraph 2 forward. Thank you. If you have any questions, happy to try and answer them.
Thank you, Joe. I did note to this Joe earlier just a few typos in it. So just to check some of the column headings where the years are incorrectly numbered, but you'll see those. Probably, yeah. Right.
Councillor John has read the paper.
I only put 6 little yellow dots on mine, so that was pretty good for that number of pages. Questions from the committee? Councillor Fuller.
I'm sorry. We seem to be in a sort of like a climate of a lot of uncertainty at the moment. And when you read through the report, there seems to be a lot of elements of risk and about how we should be reducing our risk. What are we trying to do to mitigate those sectors which are obviously a matter of quite a turbulent market? There is a real concern about our long-term pensions plan, and I think Barbara mentioned it earlier on. And I think what is important for me is to know how we're actually mitigating against this element of risk that we're facing now, much more this year than that we were in previous years. And I just really want some reassurance. I haven't done a deep dive in this like you might expect me to, but I just really would like to have some kind of response back to offer sort of like some reassurance. Thank you.
Okay.
In terms of, if you're talking around investment risk, Councillor Fuller, the fund has a contract with Hymans Robertson as our investment advisors. We have an investment strategy, which you will see papers later on in this report, paper 10 in particular, where we're looking at the implementation of a revised investment strategy. So the fund has a triennial valuation, so it's a full valuation of its assets and liabilities every 3 years. The most recent one was at March 22. Following that assesses the value of the fund's future liabilities in terms of benefits payable, and looks at the suitability of its investment strategy to fulfill those benefits in the long term. So every 3 years, we review the funding strategy, which is talking about contribution rates and required investment returns. And then subsequently, we review the investment strategy linked into that funding strategy to make sure that we've got the right balance of risk and return and asset diversification to fulfill the investment returns, but also to guarantee the security of the capital. We are looking at de-risking some of our assets, so moving out of the growth assets of equities into some protection assets and income assets in terms of infrastructure and private debt to balance that risk and take some of that risk off the table. In terms of climate change and other environmental, social and governance risks, we acknowledge that we are slightly behind the curve on that one, but due to resources and resource constraints, we are proposing in the risk report in section 11 that we monitor that risk at the moment and defer a little bit of work on that until we've got a little bit more capacity and we've got some of the more basics of the governance sorted. We do, as a fund, invite investment managers to attend meetings. We haven't got one today, but that was just due to the volume of papers on the agenda, at which those managers present their investment forecast, their investment outlook, and also contribute to their contribution to the environmental, social and governance risks and what they're monitoring and what their assessment criteria are. As part of the access pool, we have signed up to a set of responsible investment guidelines, which has some climate change and voting and engagement activities. Our investment strategy statement does contain a statement that says we rely on our investment managers to have an ESG policy and to act in that accordance with that. That isn't, we've acknowledged for a number of years that isn't necessarily having a policy of our own, but we do challenge those investment managers on our ESG, on their ESG capabilities and what they're doing on our behalf effectively to monitor that. There are some, there was a consultation from the government on the TCFD, so Task Force for Climate Related Financial Disclosures, implications for the public sector pension funds particularly. That consultation closed in, bear with me, I'll write that down somewhere, November 22, and we are waiting for the regulations to come from that. The Minister has confirmed that the TCFD disclosure requirements will not be required for the 23-24 reporting year, but we're waiting for confirmation whether that will apply for 24-25. That will include setting climate metrics and monitoring metrics and setting a target for net zero effectively for the funds and how we're monitoring and tracking our emissions, etc., etc. We have not done any work on that at the moment. We have a quote from Hymans to provide us with some support on that, but we do need at some point to do some detailed action in that. But as you'll notice in the risk report under section 11, we've said that that has to be deferred at the moment because we just do not have the capacity to deal with that. We did at one point, a number of years ago, set up an ESG RI working group for the pension fund, which had members from this committee, it had members from the board, and it had, I believe, the member at the time with responsibility for environmental circumstances from the council. That group had 2 meetings, which we discussed the objectives of the group, and then the group asked me to do all of the work. and I simply did not have the capacity to do it. So that group fell by the wayside. As we move into our TCFD compliance reports, we will need to have that group established. But again, as I say, it is just a matter of capacity at the moment. We acknowledge it is a serious issue and we do have to do something about it, but there are only so many hours in a day that we just have to do. So we will be relying on our investment advisors. There is also a national LGPS framework for responsible investment, which we could call down from some specific technical advice. But at the moment, until we've thought about what our plan needs to be and how we need to formulate and implement that plan, we haven't done anything on that, and it is high on my list of things to do. I hope that explains and provides enough excuses, Councillor Fuller.
Joe, you're an absolute star. You're running a sort of like a Cinderella service. I know, it's probably going to sound quite mean, but again, do we have timescales in place? If we haven't done any of this environmental climate change assessments, what support are we getting from sort of like Hyman's in trying to address that? If we can't, because again, we're seeing quite a lot of the implications of climate change environmental issues, and it would be quite, I think, one of the things I would look at trying to see happen is to make sure that it's a higher priority, but also to make sure that you're well supported, because at the moment that doesn't seem to be there. And I think, this is a major area for the council, and we need to make sure that you're properly supported in your role. So thank you so much for what you're doing, Joe. And don't think that I'm trying to put any more pressure onto you. I'm not. I just feel that it's something that we need to be aware of and we need to see addressed. And hopefully we can get your team being fully complemented as soon as we possibly can. But it would be useful to have maybe a timescale for that work to be done. So thank you.
That's what I can say.
No. Do you want to add anything, Joe?
No, I haven't got anything else to add, I'm afraid.
All right. So are we happy to receive and note the paper? So moved and seconded. Those in favour? That's unanimously carried. Thank you very much, and thank you very much, team. Go team. Yeah. Right. Item 8 on the agenda then, which is the draft governance compliance statement.
Thank you. I don't propose to go through this in any great detail. It is currently the draft governance compliance statement presented to you in advance of its being published in the draft annual report and accounts, which Joe just mentioned, on the fund's website by the 1st of December. The draft is presented in the same format as it has been for the last 7 years. And the draft has been reviewed by the pensions team sitting here to my right, and has been reviewed by Hyman's Robertson governance consultants. It's a very comprehensive assessment of our compliance with the TPR, pension regulators requirements, almost too granular to an extent, but Hyman's have suggested that there is an alternative format which we could use for the future, but I didn't want to do it for this year because I'd already done this one and that was going to be more work to do. Overall, performance is roughly similar of a level to where we were last year. We've got a marginal decline we've got a marginal increase in areas of non-compliance. We've got 10 areas out of 78 non-compliance compared to 9 in previous years, but they are all in 3 areas, as is set out in paragraph section 4.5 of the report. So it's knowledge and understanding, conflicts of interests, and disputes and resolution. I would reassure members that the conflicts of interest and dispute resolution policies are being reviewed as we speak. The disputes and resolution policy is out for internal consultation in the council, with all the named officers therein. We'll then go to the external employers to get their thoughts on it, and we'll then be circulated to the board for their review with an onward recommendation to the committee for adoption. And the conflicts of interest policy, currently we rely on the council's constitution, conflicts of interest, which is and the members' declaration, which you will have all signed as part of your election to the council. But we also need a conflicts of interest policy for the pension board. And with the greatest respect, most of the items of declaration on the elected members register is not relevant for the pension board. We're not really bothered about whether they own property or have investments in local companies, etc., etc. So we're working with Hymans to develop a fund-specific conflicts of interest policy, which again will be circulated around and hopefully coming to the May Pension Fund Committee for adoption. The local pension board will review this statement in detail at its meeting on the 13th of December and will recommend, if there are any changes or amendments made, we'll recommend it for adoption at the February Pension Fund Committee. We'll also be looking at an action plan for the resolution of the areas of non-compliance, which will hopefully be making next year's statement of compliance in a better position. Happy to take any questions or comments at this stage.
Councillor Brady.
Just have one question, Joe, actually, and it leads back to an earlier point actually about the pension board. Under 4.5, 1.2, it mentions about pension board members have a personalised training plan in place. As a short of a member, I see that as a positive, in so much as, you know, you won't be going in blind, you'll have training. How long are we talking about the training plan? So if we're trying to sell this to a member of our group saying, you'll get training to be on the pension board, as a governance board, you'll get proper training, the question will come back, what does that entail and how long? So just in case we get a member volunteer.
Currently, we don't have a formalised training policy, so we are working on a plan that's in my head. So really for similar, the moment regulations require that board members have a statutory requirement for training, knowledge and understanding, minimum levels of knowledge and understanding, but there's no requirement for pension fund committee members to have the same, despite the fact that the pension fund committee members are the decision makers and the board are the scrutineers effectively. So there is a requirement in regulations that members of the pension board have a sufficient level of knowledge and understanding to enable them to fulfil their role. What we tend to do at the moment is we will require all members of the board and committee to complete the pension regulators online toolkit within 6 months of their appointment to the board. For board members specifically at the moment, we have the Hymans Robertson LGPS Online Learning Academy, which is 8 modules online learning, which covers the LGPS in particular, and we require those to be completed by members at the same time as the TPR within 6 months of joining. I haven't yet rolled out the LGPS Online Learning Academy Lola to the committee because of licensing costs, and something we will be discussing later on in the agenda. But what we're trying to do, what we're working with Hymans in the governance side, is looking at creating a training plan effectively for pension committee and board members as a whole, and then identifying individual learning needs, so that effectively it's not a plan that's in my head. It is a plan that is on a piece of paper that anybody can pick up and see from an elected member perspective or a board member perspective, what are the requirements of training and learning and what is the expectation, but also from an officer perspective, should the proverbial bus hit, it's not going to fall into a black hole, and anybody can pick that up, and then we've got this policy.
So if one of our members was interested in the role, a chat to yourself and a chat to Martin with initial stages. Thank you.
Okay, so no further questions with that. Are we happy to note the report? Councillor Fuller, Councillor Brady, everybody in favour? Thank you. So carried. Thank you very much. Next one then is item 9, the investment performance and funding level through to September 2023 as per agenda item 9A.
We could do 9A and 9B together, I think, and
Alright.
I'll hand over to Chris for this one. Thank you, Chris.
Thank you, Joe. Yeah, 9B is a much more colourful version of 9A, so I think I'll go through that one. Hi everybody. For those people who don't know me, I'm Chris King, investment consultant at Hymans. I'm the other senior consultant on the Hymans team, covering for Emma while she's on a maternity leave. Baby's doing well. So probably won't surprise you. This is the report on 9B, the investment performance report. Probably won't surprise you that the biggest thing that's happening in investments and what's driving markets is inflation. As we're probably all aware, inflation took off post COVID, and ever since then, central bankers have been fighting to control it. And the way they typically do that is by raising interest rates. So through this period, interest rates rose. So this is the period up till the end of September. Interest rates rose as central banks around the world tried to contain inflation. Good news is it does look like inflation has peaked and is on the way down. The bad news is it's taking a bit longer than I think everybody would have hoped and expected. Inflation is still high. It is still around 5%. And we are kind of expecting interest rates to be higher for longer than was initially thought, until inflation is in the rearview mirror, so to speak. So I think in market terms, markets will struggle, to do more than just tread water until markets are confident that inflation has been is no longer a problem. On page 2, you can see gilt yields. So that's the rate that government pays to borrow, increase through the period as the Bank of England increased rates. And because of that, global equity markets did struggle, managed to eke out a return of just 1% over the quarter. So really treading water through the period. What does that mean to our kind of views? What it does mean is that actually some areas which were traditionally quite difficult for pension funds to invest in due to low returns, such as bonds, government bonds, and corporate bonds, we now see as more attractive areas of the market to invest in, because yields are so much higher than they were, just a couple of years ago. And later in the meeting, we'll come on to talk about private debt and infrastructure and how they could take advantage of some of those higher yields that are available to actually get quite attractive returns at a much lower risk than you would do investing in equity markets. So our view on index and gilts, corporate bonds, private debt has increased as yields have risen through the period. In terms of the funds, as I say, it has pretty much treaded water throughout the period. So the value is pretty much unchanged. We've gone from 694 to 692 million. So given the backdrop, given everything that's happening, that's a pretty decent result through the period. Why is that? I think it's due to the diversification of the portfolio. One of the oldest rules of investments is don't put all your eggs in one basket, and that's what we're doing. So the fact that we've got property, the fact that we've got infrastructure alongside the equities has helped to kind of smooth that performance through the period. In terms of funds, might be worth just mentioning the BlackRock UK Select Fund. So that's a new investment made at the start of the year. That fund has outperformed its benchmark over the last 12 months, which is good to see. So that's actually been the best performing investment over the last 3 months, and I'd say it's outperformed over the year. The worst performing is the Baillie Gifford Diversified Growth Fund. That's a fund that we've taken the decision to move away from. It's quite a complicated product, trying to time the market, which has proven quite a tricky thing to do. It's quite difficult to kind of to time the market and successfully over a long period, and Bailey Gifford has struggled to do that. So it has become, it is one that we are looking to sell. Might be just worth mentioning, there is a manager ratings page. We do assess managers from both a traditional point of view and a responsible investments or an ESG point of view. So to your question, how are we assessing managers' ESG capabilities? Well, that is something that we do at Hyman's, and we meet with managers and we're always talking to them about ESG, and you can see our ratings for the different managers is shown on that page 163. That's basically it. I don't propose going through the individual funds in detail, but unless anybody has any particular questions on those.
Any questions for Chris while he's here? Councillor Brady.
Thanks, Chris. Just one question actually on the manager rating bit you finished on there. BlackRock has performed really well. Yet the RI rating is just as adequate, which is that like to change to good rating?
Well, yeah, so
they are performing well in
pension funds. Well, so it's, I think BlackRock are the largest asset manager in the world, so they've got trillions under management, and they have the CEO, a guy called Larry Fink, is very vocal about ESG and corporate governance, and I think each year he even writes a letter that he publicizes, setting out how he feels on ESG and corporate governance. But actually, when you get under the bonnet of BlackRock, they're not as good as some of the other managers in this area. They don't tend to, for instance, challenge businesses as much as some of the other managers do on their corporate governance and their various environmental policies. So yeah, BlackRock, they talk the talk, but they don't necessarily walk the walk so much. So we don't give them as high a rating as some of the other managers. So it is something that we would like to see BlackRock improve on.
Councillor Stewart.
Sorry, this is quite probably a bit more in depth in some ways, but one of the issues that you often look at when you see these investment approaches is that actually you're also dealing with charges from individual investment sums, and obviously that mounts up. Is there any analysis of charging structures that might actually help investment returns?
So the charges are listed, I think, on the are the charges on the report. Maybe we don't list. I mean, we can certainly send you a list of charges through. I mean, we do, because of the scale. We are able to negotiate good fees with the managers, so we do get institutional rates, and it is something that's taken into account when we're appointing new managers. You can see later in the meeting when we come to talk about the new managers, we have managed to get discounts on some of the funds because of the scale involved. But you're quite right. I mean, charges are important, and it's important to, because we're investing actively, so we have active fund managers. We're not just buying the index. We're paying a fee for a team of people to choose good companies. So it's important to make sure that they're essentially earning their fee. So I think we have to expect our active managers to outperform their benchmarks. Otherwise, why are we paying them their active fees? So yeah, it's important that we keep a close eye on the fees.
Yeah.
Just very quickly, Councillor Stewart, referring back to page 84 of your pack, within the draft annual report and accounts, note 12A does summarise the investment management expenses. that we pay over the last 12 months for each of our different asset classes. We do, as part of Access, the Access investment pool, we do receive a breakdown of all of our investment fees for those assets. And similarly, we have the cost transparency initiative information from all of our fund managers. We haven't undertaken the investment benchmarking this year to review effectively value for money of those investment fees, simply because of capacity issues and the complexity of the information that's required. But we do have, as I said, the breakdown of the fees there. And we are lucky, as part of the local government pension scheme, to benefit from a lot of our managers having LGPS wide fee structures. And particularly in the Access pool, we benefit from being part of larger pots of money to benefit from scale fee reductions. So we are trying to ensure the best value for money, but that information is available in the annual report and accounts.
Thank you for that. Actually, you referenced the next follow on to that, which is obviously passive investment. If you actually look, you will have done it much more than I would have done, but nonetheless, if you actually start looking at some of the financial indices of passive investment versus active investment, almost invariably passive investment, because of the fee structure, partly because of the fee structures, and partly because obviously you've got the sort of standard black swan event. Standard, can't really say that about that, but so it is a query about the investment strategy that we might have, and whether it is, given the complexity of the current situation, whether we should be looking at moving more or a proportion of the sort of what is a relatively small pension fund into passive investing.
Half of our global equity allocation, which is 18.75%, I believe, of the total fund, is in a passive investment fund, UBS Climate Aware Fund. We started that after the previous valuation, 2019. So up until then, we were 100% active managed. We've now got a small balance of passive investment, which is a UBS fund.
Yeah, I think for me, it's making sure that you're getting value for your active management. I mean, there are some areas where you have to do it active. For instance, property, infrastructure, private debt. All of that is, by definition, an active management choice. Those areas where you have a choice between active and passive, so equities is probably the best one. It's important when you're choosing an active manager that you're getting active management, and you're getting good active management. So that's what we're trying to achieve here, I think.
Thank you both for that. I appreciate it.
Right, are we happy to note the report? Somebody would like to propose that? Councillor Ward, seconded Councillor Brading. All those in favour? Passed unanimously. Thank you very much indeed. And thank you, Chris. Joe, as always. Right. So the next section, 10, includes some restricted material.
So this item 10 is really seeking to ratify the decisions that were made of the investment panels, investment selection panels, and provide an update on the strategy implementation. The confidential appendices that have been attached are the detailed reports from Hyman's Robertson, effectively setting out what the process was, confirming the fee structures and the commercials of the arrangements. So they are deemed confidential in terms of they contain commercially sensitive information. I don't believe really there is anything significant that we would need to discuss from the confidential appendices. Most of the salient points, I hope, are covered in the covering paper. We determined that this would be an open session as a discussion because obviously these are significant decisions that need to be made in public session, but the supporting information was deemed confidential. If there are any questions on the confidential papers, we will need to consider whether we can take them in public session or whether we need to defer this discussion. sorry, to a later section in the in the meeting, but really I think the investment selection panels received a lot of information on each of the fund managers, and this is really just to reassure the remaining members of the pension fund committee who weren't on those selection panels that the decisions were made on a good basis and on the correct information, but also to provide information on the commercial terms of those investments that we're asking you to ratify today. Is that okay?
Perfect. Yeah.
Okay, so I've done the covering paper to this, but I think really and I think it's quite straightforward, but I think we can take the discussion from the covering paper, but obviously Chris is here to take any detailed questions, if that's okay, Chris. So if I could split this into sort of 3 sections as per the recommendations, but also then add a little bit at the end. To start off with the private jet selection panel. I haven't got a touchscreen laptop anymore. I can't just flip up. So section 4 of the report and appendix 1 contains the selection process for private debt, who was on the panel, what we decided to do, and the commercials, as we say in the appendix. It was proposed or it was agreed by the selection panel that Pantheon Senior Debt Secondaries Fund 3 GBP was the preferred solution. And so we are, subsequent to that, we have engaged legal advisors, Gowlings, to confirm the legal documentation, and we're looking at completing the information required to get that fund on board. So really, if we could possibly, I'll take any questions, obviously, on private debt and the process, but if I could move the recommendations on 2.1 of the report, which that Pantheon be appointed and we make the commitment to the senior debt secondaries 3 fund, and a commitment of £65 million to that strategy, and that you note the progress made to the legal review.
So I only have one question here, is that given that a number of us were actually on the selection panel, here we're effectively endorsing our own selection.
The reason being that not everybody from the committee was on the selection panel. So effectively, the selection panel had no authority to make the decision. The committee makes the decision. So therefore, those members that weren't on the selection panel have the opportunity to challenge, understand the process of the discussion, and the formal committee makes the decision to ratify the appointment.
And just to be precise about it, those of us who were on the selection committee are not in any way compromised by being involved in this decision now.
No, not at all. You were appointed to the selection panel by the committee.
Yeah.
It was a subgroup of the committee that was agreed by the committee to delegate the selection process, but that the decision made by the panel would be ratified by the committee in full session. That was what was in the paper for the previous meeting when we set up the panels.
Good. Well, I just thought it was worth recording that. That was all. Councillor Stewart.
I wasn't on the selection panel, and therefore I can make comments. I have looked through the papers. I don't wish to make any comments. It appears that my colleagues have made a clear assessment of all that was available, and I would endorse what they said.
No other comments on that, Joe?
So could we formally move those recommendations on 2.1?
We'll move all 3 of them then together. Is everybody happy with that? So Councillor Fuller proposing, I think Councillor Stewart was seconding, everybody was in favour. That's unanimous. Thank you.
Thank you very much. That's private debt. If we move on to infrastructure, again, section 5 of the report sets out the process that was followed, the panel, the reports from Hymans, and the next step. So effectively, we haven't made any further contact with JP Morgan to confirm their appointment. or to start legal review or commence a transition plan. Sorry, I should have said for private debt. We're working towards a fund close of the 20th of December, which attracts which gives us the benefit of some very attractive fee discounts. So that's why we're moving that one much more quickly than we moved the infrastructure. So we haven't got a date yet for the close for the infrastructure fund, but following today's decision, we will reach out to JP Morgan and initiate the onboarding process for that. So again, similarly, if you have any questions, the same process applies. The panel was appointed by the committee to make the decision. This time, the decision hasn't been implemented before the committee meeting, so it's really formally approving the decision of the panel to appoint JP Morgan to invest in the Infrastructure Investments Fund, to make an initial commitment of £30 million in 2024, and then a further commitment of approximately 40 million in 2028-29 to achieve the desired target allocation, to opt for the GBP hedged share class, to authorise myself to commission legal review of the fund documentation, and that we instruct Hymans Robertson to provide a transition plan and assess the availability of fund units on the secondary market. Happy to take any questions, but we've moved those recommendations.
And I'm happy to second them. Are there any questions? No? All those in favour? That's carried unanimously. Thank you, Joe.
Thank you. Sorry.
Yeah, just to say on that, we have been made aware that there is somebody actually looking to sell their units on the secondary market at a discount. So it's possible that we'll be able to get in with a discount on the asset value, which is good.
Hurrah.
Updates on both of the private debt implementation and the infrastructure implementation will be provided at the next meeting in February. Hopefully the private debt will tell you that we're already invested, and the infrastructure may also say the same, who knows. So the third part of this report that's on the paper is around the fixed income transition. So at a previous meeting, the committee agreed to transition the Schroeder fixed income portfolio into the Access Royal London Asset Management bond portfolio. We have had some difficulty in communication with Waystone, the new operator who took over Link Fund Solutions for the Access pool. Hymans raised an issue with me. I've raised it with the Access Support Unit, and the Access Support Unit are initiating contract management rectification access with Link, Waystone, apologies. We have now got confirmation that our local Northern Trust custodian account is open to enable trade. We've got the Waystone account open to enable trade. So Hymans are working on a transition plan, and we are moving. The intention, if possible, is to get the transition completed in December, subject to capacity and not having the deal over a weekend, a month end if possible. Otherwise it will be January 24, but we will update you at the next meeting. But Chris, have you got anything addition to add to that?
Yeah, I mean, as Joe said, it's been quite heavy going with Waystone and getting this through. They've been quite slow at getting back to us. I mean, we've been doing everything we can to get it over the line for you, but they have been very slow. We can do it this year, but I think it would mean trading over month end, which I know you want to avoid. So it just because of the timescales involved in moving money, it's tricky to do it without it going over month end. Otherwise, we'll be pushing up to Christmas, and a lot of people in the city go on holiday at Christmas, so liquidity's not very good. So we would advise not trading over Christmas and pushing it into January probably.
If we'll take this outside the meeting, Chris, but I think we may be able to accommodate the month end as long as we've got sufficient warning and sufficient brain capacity to deal with it at the time.
All right. So we need to move the items to 2.3 as well on here.
Yes, please.
So also move them, seconded. So moved by Councillor Fuller. I'll second them. Everybody in favour? That's unanimous as well. Thank you very much, Joe.
One very quick item that's not on the paper, but we've touched on it earlier, the investment strategy statement, which is the documentation that formally publishes effectively the strategy that we've been working towards. We've commissioned the work from Hymans to complete the review of the investment strategy statement. It will be a full update of the previous version and will include items around the access pool, the strategies that we're just implementing, and some ESG RI considerations. The work has been commissioned, and the intention at the moment is it's presented to the February 24 Pension Fund Committee meeting, but as we discussed earlier, there may be some tweaks or discussion points around ESG and responsible investments. So we will work towards February and then see whether we adopt it at that stage or whether we take it for further review and adopt it in May.
Right, item 11 on the agenda is the governance support update.
And we have Susan and Andrew online,
Somewhere?
ready to present.
Up there. They've been left. Here they are. Hello, Susan.
Good morning.
Hello, Andrew. We've got you
Good morning,
split
Pierre.
across our two whopping great big screens here now. So we can see you in glorious Technicolor with blurred backgrounds.
Yes, well, I'm keeping my screen small so I don't see myself. So morning and thank you for the introduction there. I'll just kind of kick off if that's okay. So this update follows on from the paper I presented last committee in September. What we're asking the committee to do is to note the contents of the report, continue to support the actions and approach to fund governance that were outlined in September and that we're reporting on today. We're also asking for some support to conclude the structural options paper as well. Before we go into the progress update itself, it's probably worth noting what's changed since September. The admin team have seen experienced staff leave the fund, unfortunately, which has resulted in officers reprioritising some of the activities to focus on. That's really kind of based on the working assumption we agreed at last meeting, which is namely that the pension fund will have a fully trained and resourced team, and specifically the admin area is the key focus there. And it's just to make sure that they can deliver on their obligations to pensioners, members and employers. What that's meant is it's impacted some of the quick wins and has resulted in a bit of a delayed start to the data improvement plan work. However, we've got an end date there of the end of March next year, and we still believe that that's achievable. So while we're not kind of as progressive as we want it to be, that date isn't at risk at the moment, so that's good. Conflicts of interest policy was the other kind of quick win that we had talked about. Work on that has started, and we're looking to share that with the committee and board into early next year. The final kind of quick win update was there's been a shift in focus across the two planned system implementations. So that's been as a result of the resource challenges that we've had. Immediate payments is now targeting the early 2024, and enhanced admin to pay has been kind of prioritised because that will deliver some more immediate benefits for the admin team. That element requires support from the third-party system provider, Haywood, but I believe that that's now been secured. In September, we also talked about some pinch points, in particular the demands on Joe. Governance officer role has just been advertised, and I would say that the role and the advert have both been adjusted just to take account of the learnings from the previous advert, which unfortunately didn't attract any applicants. So fingers crossed, and lots of sharing across LinkedIn. I know that Andrew and I have already done our sharing and bigging up the Isle of Wight Fund. There's other various job sites that Joe's advertised on as well. So as I say, we'll keep our fingers crossed and hope we'll generate some interest in that role. I've also been working with Joe on a heat map, and that's really just to reflect the demands on Joe's time. It's absolutely still a work in progress, but the purpose of that is really to evidence the areas where additional support needs to be directed. Don't think we'll really find any great areas of surprise, but we just want to make sure that we're not missing anything. But that, as I say, is a work in progress, just working with Joe on that one. At the original workshop in August, we kind of went through lots and lots of priorities, and we kind of divided them into high, medium and low priorities. That was particularly across the governance area of the fund. And at last committee, we agreed to focus on the high priority items. On table 5 in the report, there are kind of just a wee kind of table update of where we are with those. There were 31 high priority activities to be worked on, and the really good news is that we are underway with over half of those activities. So that's really good news. 4 of them have already been completed, so that's good. So the annual benefit statements, pension saving statements, breach recording and reporting work, and the input to the recent pooling consultation, they've all been ticked off the list. So 4 out of 31 are done and dusted. There's probably 3 areas of risk that we still have. One around recruitment and induction of officers, and around retention of staff. Probably no great surprise there, just given the focus of staffing across the admin and the governance areas. The other area of kind of we're looking at kind of at risk would be around maintaining KPIs. It is, absolutely the fund are working very hard to keep those KPIs on track, and the KPIs are currently being met. I'm not suggesting otherwise by any stretch, but just given the experienced staff leaving, there's maybe a kind of slight risk in there. But the fund absolutely have plans in place to make sure that they're managing any risk that would come from there. There's 7 areas that we've noted as not yet started, 6 of which have consciously either not been started or are not yet due to start. So they're kind of under control. One kind of update since the pack was prepared is that just given the tight timelines on the actuarial tender, because the new actuarial appointment is as of May next year, Joe has started that work. So that's one of the areas that was listed as not started on the report that has actually now started, just given the current the tight timelines. Andrew and I do have regular check-ins with Joe and the colleagues, and that's to assess the prioritised activities and just kind of sense check where we are with these. Purpose of that is to make sure the work is still achievable, and just discuss if there's any kind of adjustments that we need to make. And the purpose of that is just to make sure that the workload is manageable across all the officers. What we also do is that we kind of look at the original prioritisation just to see if anything has changed, or to see if there's anything new coming on the horizon that we need to kind of address as well. What we're trying to kind of do is that kind of consciousness of decision making that we're trying to kind of really kind of get embedded in that kind of process as well. The 1-page kind of pack, I know it looks quite busy, but that's quite a good kind of high level overview of where we are, kind of all the activities that we're looking to do and where they are in the kind of their status, which hopefully I've kind of articulated to you. The one thing I was going to say, Joe, maybe as a kind of a little bit of evidence as well, that we looked at the risk register, and again it's just kind of how we're approaching things. So the risk register has quite a number of risks on, as you would imagine. What we've done is we've prioritised, and we've had a session on red risks, which I know was in the pack. We've also had another session on ambers, and then we've still to have one on green. So again, just breaking down the activity just so that it's manageable bite-sized chunks. Joe, I don't know if there's anything you want to mention on the risk register at all. I know that was on the agenda items anyway, specifically want to call out?
I can do that in a minute, Susan. I just wonder, do colleagues, do committee members have any questions or comments for Susan and Andrew before I go on to the risk register?
No.
Okay. Can I just express my huge thanks and appreciation to Andrew and Susan for the huge amount of support that they are providing to all of us at the moment. It is really gratefully achieved, and to an extent they are my brain. I don't have, they're my external storage device for my brain. I don't have enough capacity in my head to control everything. So Susan and Andrew are keeping me on track and making sure I do the stuff that I need to do. So in section, excuse me, scrolling back up through the pages. In section 9 of the covering report, which is on page 217 in your pack, I've summarised the existing risk register and the work that we've been doing primarily on the red rated risks to identify them. I've summarised in section 9.2 and subsequently the previous score of the risks and the current score, and then the reasoning behind those amendments. You'll see, as you would expect, the resilience, key person risk and the capacity resourcing risks are scored at very high. A lot of the mitigation actions are being driven by the support that Susan and Andrew and Hymans are providing us, both on the governance side and also through the administration contract, which I described earlier. And the advertisement of the governance compliance officer post should also help, with the admin structure should also help. And any progress on the Barnett-Waddingham options report would also help cover both of those. The access report we've reduced down from a red risk to an amber risk. Primarily the red risk was around the issues that we had with the procurement or the replacement of Link Fund Solutions with Waystone and the amount of work that was required to do that. That certainty of appointment has now been closed, has now been completed. So we think that the level of risk to the of access to the fund specifically is lowered. There is still a lot of capacity issues, but I'll cover that in the next session. Cybersecurity, as Barbara mentioned, it's something that we do need to focus on. It is remaining at a high risk. It's not very high, it's just high now. But the reason it's high is because the impact will be very high of a cyber attack, even if the probability is low. So it's one of those, this is consistent with the scoring that the Isle of Wight Council has for its cybersecurity risk, and we just need to keep an eye on that. But we do need to look at some fund-specific disaster maintenance, data maintenance, disaster recovery planning, which is on the list of things to do. We've left ESG, RI and climate change as a high risk, which we're asking at the moment that the committee accept as a high risk, noting all of the conversations we've had previously around capacity and the ability to focus on TCFD requirements as and when the regulations come in. That work is on the list of things to do, but at the moment we're just putting it on hold for a while. And then lastly, the fund not being aware of or failing to respond adequately to changes from central government, we've reduced to a medium risk from a high risk, because we are doing the best that we can. We're keeping on top of consultations. We're working very well with McLeod. We've got support in place from Hymans and the administration software provider to carry out those actions. But the risk could increase again when new requirements are for anticipated changes come into force. So good governance, TPR code of practice, employment cases, PCFD, etc. So really, we have done a lot of work on the red risks. As Susan mentioned, we've also started looking at the amber risks, and we'll get to the green risks, but we'll present a full risk register to the pension board in December, which will then come to the February pension fund committee adoption. Happy to take any questions or comments on either the risks or the report, but generally move the recommendations of section 2 on page 215, noting the report, continuing to support the actions to an approach to fund governance, continue to pursue the conclusion of the Barnett-Waddingham report, and note the updates to the red risks.
And a second. Are there any further questions on it? Councillor Brading.
A quick question, actually. The risk register, and I know it's a lot of work involved, and it's great for it. It's really, you're on top of the risk register. I know you are, manpower allowing. The risk register goes to the board before it comes to the committees. I thought it came to the committee before it went to the board.
At a previous meeting of the pension fund committee, it was agreed that the pension committee would delegate the review of the pension risks to the pension board for detailed scrutiny, and believe me, it is detailed scrutiny, before it comes to the committee with a recommendation. So that was a recommendation that was put to the committee a few months ago. Happy to reconsider that, but the board have more in-depth review of the governance and administration compliance standards, and that was something that they thought they could add more value to. rather than spending a long time debating the risks here. We do present the full risk register to the committee once the board have updated it, but it's just really to make effective use of the board's time and give them something that they can report back to you and consider your views on. But that can be revisited.
So perhaps that mean, okay, well, I got, when Barbara was talking this morning, in Atlas this morning, she was almost like criticising the risk register in some respects. But if it's their risk register to bring back to us, she was criticising herself effectively.
I think she was perhaps amplifying what the board's consideration of it was.
But they were inferring that the risk register, we hadn't done our bit on the risk register,
Yeah.
but they haven't done their bit either. So
I think Barbara's comment, I believe, was that they didn't see the risk register at their last meeting. And the reason they didn't see the risk register at the last meeting was because I hadn't updated it because of capacity and resilience issues. So they didn't see a risk register, but they did debate the risks of capacity and resilience. They did ask for the risk register, Paul, but to be perfectly honest, I had no capacity to deliver it.
Okay, so we got, it's moved and seconded. All those in favour of the recommendations, so approved. Thank you very much again.
Do we need? Thanks, Andrew and Susan.
Yes,
You're
thank you very
welcome to
much
stay
indeed.
all day. Thank you.
Thank you.
I think
Thanks for
what
your
we'll
time.
do is we'll take a 5-minute break. We've been going for over an hour and a half now, and give everybody a chance to have some comfort if they
Okay.
so desire. Thank
Thanks
you
for your
again.
time. Thank you. Thanks.
Thank
Bye-bye.
you. Thanks. Bye.
It's good to stretch the legs. Verbally.
Verbal update. There we go. So we've touched on knowledge and understanding a couple of times this morning, part of the governance compliance statement, part of the board membership, something else as well. So following this, we have in previous meetings presented a report of members' progress in completing the TPR toolkit. I can't remember where we're at with that. I need to revisit that. But for the 2 new members of the committee, I will circulate the link to you straight after this.
Should we circulate it to everybody?
It's just circulated to everybody, and then everybody can demonstrate that they've done it or not, as the case may be. So that's the minimum level of requirement. And as I said, that is the pension regulators toolkit, which covers public service pension schemes rather than the local government pension scheme, and definitely not the Isle of Wight pension fund. There is as I mentioned, also Hyman's Lola LGPS Online Learning Academy, which is more specific to the very specific to the LGPS, but has a charge to it. The TPR toolkit is free. The Hyman's Lola has a fee of, at the moment, I think it's £3,000, I think, for 10 licenses. And at the moment, we've rolled that out to the board because the board have a statutory requirement to have minimum levels of knowledge and understanding. But it is also available could be made available to the committee. But again, that would incur additional license fees if everybody wants to have their own login. So it's something that we need to consider, and I haven't rolled it. There are a couple of spare places, as it were, in the licenses. So I could, if anybody is interested in doing that, I could roll that out. But primarily the purpose of today's agenda item, was that Hyman's have launched a knowledge progress assessment survey. So members who have been here for a while, and I think it might just be you, Councillor Jarman, or maybe even Councillor Jarman and Councillor Brading, who did the knowledge assessment survey in 2021, which we received a report from that set out what our training plan could be. And then life happened and we didn't do anything with it. But they are now launching a knowledge progress assessment, which basically sets out how much knowledge and understanding committee members have. I think Councillor Woodworth did do it as well. So we've expressed an interest in that knowledge progress assessment, but not yet signed up to it. Because again, it has a license fee and we need to commit to everybody undertaking and participating in it. It would give a temperature check of the knowledge and understanding of committee members. It would allow focus for a training plan for both the collective committee and board, and also for individual members. And it would be a way for us to demonstrate progress in the improvement or otherwise of our knowledge and understanding. Appreciating that we have a number of new committee members since the last assessment. My initial thought was, before the changes in committee members, that it would be a good idea to do this, to undertake an assessment of our knowledge and understanding to demonstrate progress. But given we've got a significant number of new members, if you include Councillor Luciani as well, I wonder if it's worth doing it as a starting point. But then the question then becomes, if we've got elections in May 25, and there is I mean, I'm not prejudging the answer, but given history, we have a significant change in committee membership after the elections, whether it's the same people in post or not. I'm just wondering whether it's worth doing. So what I wanted to do really was to test your thoughts on whether we do an assessment of this knowledge, of your knowledge, and build that into a training plan, which will help us comply with our governance compliance issues, or whether we don't do it. And it's really hard. I'm a bit of a quandary and I don't really know what to do. So thoughts, please, gentlemen.
Councillor, I'll give mine last, I think. Councillor Brading.
It's a very tricky one, isn't it? Because the GPR toolkit was really difficult. You know, I really had to struggle. Well, it was a struggle to do it. It really tested what I actually did know and didn't know. It was quite an eye opener. I thought I'd made a right muck up of it. I didn't score too badly in the end. So I think it's very important that new members to this committee do it. And in theory, they do it now. But I do take on board your point. In 2025, there may very well, in the Isle of Wights, be a change of administration, change of councillors, and a whole new committee. Then you have to do it all again. So the dilemma is: do you leave it sort of 6 to 17 months in limbo, or do you do it now for the non-committee members? And I suppose in theory, if we're acting as a pension committee, we should say all new members should now do that training, rather than wait 18 months till we get a potential new committee. Otherwise you're in limbo for that period of time with not knowing where you are training wise. So I'd probably err on the side of should really do it.
I think I agree with you, Councillor Brading, to be fair, that if we do an assessment of our knowledge, we've got 18 months before the election, however long it is, and we've got business that need to be transacted in that time. So if we do the knowledge assessment and identify areas of development, then we can focus on those areas of development, but also look at supporting the development of a training programme for committee members. And effectively, one thing I've been aiming at for quite some time is looking at a 4-year training plan that basically says, from election, this is where we start the committee. And by the time we get to the end of the 4-year cycle, you've got to everywhere that you need to be. But I have a plan to start it again. And if you are an ongoing member, a refresher isn't going to hurt you, but it will keep you up to date with the legislation. So I think I'm going to put you down as a positive for doing the assessment.
Other comments? Councillor Stewart.
Just going to agree. I do apologise for doing this all the time, quite a bit here, but there is no doubt that however much knowledge we have from the past, actually trying to keep that active, especially given the sort of changes in legislation and approaches, is important. We don't know what's going to happen, therefore we have to plan with what we've got. And I think keeping our knowledge up to date or improving it is the best thing that we can do at this stage.
Councillor Fuller. feels to have certain members here at the same time. You know, not some, you know, sometimes there are questions you want to ask. Other people answer questions. That's answered by face-to-face training. Better than online training. I think people have seen ourselves training maybe an hour after. We also be able part of our training as well. I think that in try to bring in, and I think it's important rather than push on this job. Because I think, you know, that's I find personally. But yes, I do support it.
The TPR module is, there are 6 modules. They can take half an hour each, so you could do it in 3 hours. Or if you do it for doing it online, yeah.
That's okay. When we have this.
Do you think?
I'm quite happy doing things like training where there's some degree of evaluation or feedback from it individually, doing that online, but it is a very much a personal preference. I do an awful lot online, and I think my wife would argue far too much. Maybe I should do more replacing roof tiles and gardening, but there we are. So I think we were quite split there, really, in terms of the online and face-to-face. I do see the value of the face-to-face element.
So I think what I will do to start the process off, I will send everybody the TPR toolkit. Do it if you can. If you can't, don't. But I will also sign up to the knowledge progress assessment questionnaire, which will be a short, probably 15-minute questionnaire that says, what do you know? This subject, I know a lot, I know a little, I know nothing, I don't care. Sort of thing. Not quite, but you know what I mean. And then that will help us to focus on what are the areas of training that you need, and we can then target the training to either focus on the online modules or face-to-face training. Back 3 committee cycles ago, 3 election cycles ago, we always used to run a training session at 9 o'clock in the morning before a 10 o'clock committee, or we did a 9:30 training session and started a committee at 10:30. I can't remember, but we did that. But then, and then in the last but one pension fund committee, we did a committee meeting. We had some lunch, and then we had a training session in the afternoon, which was okay, but that was very, very tiring. An hour before, it enabled us to the focus on the agenda items, as whoever it was that said that. Sorry, I've forgotten. Thank you. So if we sign up for the assessment, that's just a quick-ish, relatively quick survey assessment that will then enable us to enable me to target on those areas that people are missing, that we can focus the things on. We can get experts in. It will be Hyman's, it will be the fund managers, it could be somebody else, whoever. But we'll sort that, and we'll start looking possibly from next year's committee cycle, so May 24. See if we can start building in a training session before committee meetings and make that a regular feature. And then obviously supplement that with online learning, supplement that with opportunities to go either have dedicated training sessions in here or have external events that are happening, or call experts in or whatever. So we'll work that through, and I'll work with Hyman, Susan and Andrew particularly to try and develop that. So
Good.
I'll sign up for the knowledge process progress assessment. We'll each get an individual login, sign it up, do that, and then we'll focus the training plan from there. But we'll do a mix of online and targeted learning. And again, whether there's assessments or questionnaires or whatever, and we'll keep doing this knowledge progress assessment. The difficulty with the pension committee is it is by nature dependent on election cycles, and whilst it would be lovely if you were all elected again next year, and you could all stay on my pension fund committee, I don't want to promise anything, unfortunately.
Good.
Okay, thank you.
There you are, Paul. Good training. Should keep you going for the next 10 years on this committee. Yeah, get some brownie points for that. Right. Next item is item 13 on the agenda, which is legislation and regulation update.
This is probably more a lack of update because there has been no progress from central government on anything. The DLUC consultation on investment pooling was submitted on the 2nd of December. I understand from various emails this morning that there may be something mentioned in the autumn statement at 12 o'clock on the outcome of that legislation. So don't hold your breath, but I'll update you at the next meeting. The TPR Pension Regulators General Code, the consolidation of 10 of its 15 codes of practice, is still expected to be launched imminently. The consultation closed in May 21. Every month since about January 23, we've been told it will be launched at the end of the month. The last one was it was going to be launched at the end of October, and it wasn't. Hymans are seeking clarity from the pensions regulator on what's happening next. It's subject to parliamentary approval, but there was a conversation at one point whether it needed to be subject to parliamentary approval or it could just go through. So we're waiting to see what's happening on that one. The Good Governance Project, which was looking at standards of governance and improving the governance of the LGPS, is still with ministers for consideration. It was recommended in 2020, I think. And we're waiting for an update from the LGA on progress with that. We've talked about TCFD regulations. Just to let you know, though, we are working towards compliance with both the TPR's General Code and the Good Governance recommendations in advance of them being made into regulation. So we're trying to promote best practice before we have to be enforced on this. So lack of update on legislation and regulation developments.
Well, that wasn't such a lack of update. That was quite detailed, I think. Thank you, Joe. Item 14 then, members' question time. Now's your big chance, people.
I'll look over the top, and if you dare ask me.
Right, I think that's all the questions for today then.
Perfect.
Right, the next one is to consider passing a resolution that under section 100A(4) of the Local Government Act 1972, the public and press be excluded from the meeting for the following business, namely item 16 and 17, on the grounds that there is likely to be a disclosure of exempt information as defined in paragraph 3 of part 1 of schedule 12A of the Act, and in all the circumstances of the case, the public interest in maintaining the exemption outweighs the public interest in disclosing the information, and I so move. I look for a seconder. Councillor Fuller, all those in favour? Any abstentions? One. So moved. Right,